All right, we're going to explain a life insurance company and how they go about making financial products that benefit clients throughout the country. Um, One of their policies, the ones we're talking about now, is permanent whole life insurance. And with the permanent whole life insurance, you've got immediate legacy for your heirs or charities. You got guaranteed premium payments, guaranteed cash value. You have tax advantages, creditor protection, and opportunities for retirement income. First thing is premiums go in. Your premiums can never be increased. It's contractual, and once they've agreed to have you cover you with the life insurance, that premium cannot be changed by them. You have a guaranteed death benefit. As long as you make those premium payments, you are protected. You have guaranteed cash value. As long as you make that, it's a contractual offering. You'll be able to see what the cash value increases are going to be every year. You're going to be able to recapture premiums through these increases of cash value over time. And there's dividends and interest that can be paid on the cash value, and the dividends and interest are not guaranteed, but once paid, they can never be taken away from you. And most of the companies that we deal with have been paying uh, dividends well over 100 years. You have dividends options for these things. You can have them paid in cash. You can use that dividend to reduce your premium. You can use it to buy paid up additions, increasing cash value and dividends in the future. You can have it accumulate at interest. Purchase 1 year term life insurance. You may be diagnosed that you got 6 months to live and the dividend's coming up, and it may be an opportunity to have that dividend buy 1 year term life insurance that could really enhance the value to your heirs. Or you can use the dividends to pay loan interest or loan balances on your contract. So the paid in cash, you can do whatever you want with it and use it to reduce premium. Purchase paid up additions, accumulate at interest, purchase 1 year term life insurance, or pay loan interest on a balance that you may have. So let's take a look at what a policy looks like. First off, you can see we got premium goes in. That can never be changed by the company, and you agree to make that payment. Remember, there's flexible ways to make that payment. You have guaranteed cash value. You see, as we go out here, this cash value starts to repay you for staying with the company. The reason why there is no cash value in the first couple of years of the contract because someone in the pool dies and they're paid out. So that's why there is no cash value in the first couple of years of your contract. You have a guaranteed death benefit. In this case, this is $1 million. Dividends are increasing over time. They're not guaranteed, but once declared, they can never be taken away. And then the guaranteed cash value plus the dividends will then show you what your current cash surrender value is, and that's also shown also what the non-guaranteed death benefit. This is being used to buy paid up additions, so after that dividend was used to buy paid up additions, instead of a death benefit of 1 million, you have 1,002,246, and that's increasing over time. So whole life insurance offers permanent insurance protection designed to last and provide multiple benefits throughout your entire life. The primary guaranteed features of this kind of policy are guaranteed annual premium, guaranteed cash value, guaranteed death benefit. Once paid, the value of dividends and interest cannot be reduced. So, looking again, there's the guaranteed annual premium. The cash value changes, increases over time. The death benefit can increase over time. Your dividends can be used to be paid in cash. used to reduce the premium, used to buy paid up additions, and over time, your net cost of insurance goes down. The flex pay strategy, just don't want to get too much in the weeds here, but what it is after you've paid in for several years, is that we take an average of what your dividends are looking at, and we take the difference of that average and what you're paying and reduce the amount you're paying now and use the dividends to help make the payment. So that's a great feature that you're able, and as you can see, you're over time, the cost of your insurance is going down. So it's just another flexible strategy that we have that's available to us. So it's a way to maintain your coverage and reduce your costs over time due to the features of a participating whole life insurance contract. Now, what I want to show you here is that whole life simultaneously provides economic value protection as well as asset protection. It acts in a multiplier effect. So it allows us, as I mentioned to you, it makes everything else that you own, your 401ks, your house, any other investment accounts you may have, or cash accounts that you may end up with. Dollars go into life insurance in the form of premium payment. Death benefit is there, and that's immediate. And it can be an increasing death benefit depending upon how it's structured. And you got a disability waiver premium, meaning that if you're too sick or too injured that you can't work, this premium payment will be made for you. It can provide protections of creditors. It can have accelerated death benefits. Take, for instance, you are stated that you've got 6 months to live. We can use the death benefit to provide coverage for you tax-free. We have estate distribution options. We don't have to worry about how it's owned or titled, because when it's passed to your spouse, it goes tax-free and tax-free to your children. There's some estate conservation options. It can be used to maximize your Social Security. The cash value is there to use as emergencies and operations. Dividend options, we've talked about that. Excuse me. There's also living values of life insurance. You can use the dividends to reduce the cost of your insurance. You can use dividends for charitable giving. You can use it for, as I said, a permission slip, because you have the life insurance. You can spend the wealth that you have during your lifetime, knowing that the insurance is going to go to your heirs. You can use it to annuitize assets, thereby increasing income and reducing taxes during your retirement phase. You can use it to maximize your pension, have a higher payout, because you know if something happens to you, it's going to immediately be paid out to your heirs. We can use it to help recapture some taxes during the retirement phase from retirement plans. Income maximization, we can make sure that we're going to be able to, again, have a permission to spend your assets during your lifetime, because you know that the death benefit is going to step in and replenish. Volatility defense for income purposes. Principal, being able to have permission to spend principal as well as interest, thereby allowing you to rest assured that you're not going to run out of money. Use it for enhancement of any collectibles you may have, reverse mortgage income on your home, and any kind of enhancements for your business arrangements that you may have. The living value of the death benefit. Owning a whole life policy with other assets demonstrate that it is more than just death protection. Owning whole life in retirement can enhance the performance of other assets, creating additional retirement income for you. Whole life can protect your assets from eroding factors such as market risk, inflation, income taxes, illiquidity, and more. So by having whole life, it really lights up your entire model, enhances everything else you have, and gives you a lot more flexibility and choices than you do without having it. So review this and any questions, feel free to give me a call or email me. Thank you.